Hello and welcome. Today, we're taking a deep dive into a really fascinating company, Camlin Fine Sciences. Now, this is a specialty chemical company that is at a serious crossroads. The big question we're asking is this a classic turnaround trap just waiting to burn investors, or could it be a potential multi-bagger in the making? Let's get into it.
You know, the whole story, the whole drama is right here in these two numbers. Just look at this. Camlin's stock price has absolutely collapsed, falling from a high of 333 rupees all the way down to a low of just 96. So what on earth happened here? And maybe more importantly, what comes next? That's the mystery we're going to solve together today.
All right, so before this massive fall, Camlin Fine Sciences, or CFS as we'll call it, was actually seen as a pretty high-quality company. So to really understand if a comeback is even possible, we first need to get a handle on the strong foundation this business was built on. So what do they actually do?
Okay, so here's what's really interesting about CFS. They aren't just another chemical company. No, they are one of the world's biggest producers of essential food antioxidants, things like TBHQ and BHA. Now, these are what you'd call non-discretionary products. They're literally the ingredients that keep your food from going bad. And their secret sauce? It's their vertical integration. They control the entire process from the very beginning to the very end, and that gives them a really durable moat in this business.
So if the core business was so strong, you have to be asking, where did it all go so wrong? Well, like a lot of stories of corporate trouble, this one starts with a massive, really ambitious bet. A bet that turned a company that was consistently a winner into one that was just bleeding cash. Let's see how this all played out.
Wow, the numbers here are just staggering. I mean, look at this. From a really solid 60 crores in profit in fiscal 22, the company just plummeted to a 105 crore loss, and then it got worse. A 158 crore loss the very next year. This wasn't some slow decline. This was a catastrophic collapse. So what caused it?
Well, the answer really boils down to this one number, over 400 crore rupees. This was the massive amount of money, the capital expenditure, that CFS poured into a brand new world-class plant to produce vanillin, which is a key ingredient for aromas. This was supposed to be their next huge growth engine. Instead, it became the source of all their problems.
And here it is, the perfect storm. CFS got its huge new plant up and running in January 2023. And you won't believe the timing. It was the exact moment that Chinese competitors decided to flood the market. This caused vanillin prices to just crash by 40 to 50%. So you have a brand new factory with high fixed costs, meeting a market with collapsing product prices. It was, without a doubt, the absolute worst-case scenario.
So that's the crisis. A pretty big mess, right? But is that the end of the story? Well, there are some interesting green shoots starting to appear that could, and I say could, signal a recovery. The real question for us as investors is, are they legit?
Now, this is probably the most powerful bullish signal you could ask for. The company's founders, the Dandekar family, they didn't just sit on the sidelines and watch. Oh no, they put their money where their mouth is, and they dramatically increased their stake from just 17% all the way up to nearly 49%. They invested hundreds of crores of their own money during the downturn. That, my friends, is some serious skin in the game.
Okay, so beyond that promoter conviction, there are three really clear catalysts for a turnaround. First, the U.S. has slapped a big anti-dumping duty on Chinese vanillin, which gives CFS a huge advantage in its biggest market. Second, they're being pragmatic and they're shutting down their cash-burning operations in Europe and China. And third, their high-margin blends business is actually growing at a strong 15 to 20% clip. This looks like their strategic comeback plan.
But wait, it's not all good news. Let's not get ahead of ourselves. A potential turnaround story is, by its very definition, risky. So let's take a deep breath and have a sober look at the very real dangers and red flags that could completely derail this entire recovery.
And the risks are significant, for sure. We're talking about 2 straight years of heavy losses, a credit rating downgrade from the agencies, a brand new plant that's running way below capacity, and, a history of management missing its own financial targets. These are not minor issues. These are systemic dangers.
So this investment really has a truly binary outcome. I mean, it could go one of two very different ways. If the bull case plays out, if that U.S. anti-dumping duty holds and the vanillin plant finally ramps up, the stock could be heading towards 195 rupees. But if the bear case materializes, if the duty gets reversed or they just can't execute, it could fall all the way down to 75. The stakes could not be higher.
Okay, so we've seen the strong foundation,
the devastating crisis, the potential path to recovery, and the really serious risks involved. Now let's try to put all of these pieces together and arrive at a data-backed verdict.
This is the ultimate question, isn't it? After weighing the compelling bull case against the very real, very scary bear case, what is the final conclusion on this stock? What should we do?
Our quantitative analysis, which basically weighs everything from financial strength to business quality, gives Camlin Fine Sciences a score of just 33 out of 100. Now, what this score reflects is a company with a high potential reward, for sure, but also extremely high risk.
So this brings us to our final verdict: avoid watch list. Let me be clear, this is not a stock for conservative investors. You can think of it as a classic cigar butt investment. One puff left. It's a high-risk, speculative story that could be explosive if it ignites, but it absolutely needs to be monitored very closely from the sidelines. Our base case price target is around 135, but the risk profile is undeniably high.
And to help you monitor this if you choose to, here are the exact events that would basically break the investment case. If that vanillin plant utilization fails to cross 50%, if that crucial U.S. anti-dumping duty is reversed, if they post a third straight year of losses, or if the promoters themselves start selling their stake, any one of these would be a huge signal that the turnaround thesis is failing.
Before we wrap up, a quick but very important disclaimer. Remember, the analysis shared here is for educational and informational purposes only. I am not a SEBI-registered research analyst or investment advisor. Investing in the stock market involves significant risks. All the data and charts shown are based on public information and my own research notes. Please do not treat this as a buy or sell recommendation. Always conduct your own due diligence or consult with a SEBI-registered professional before making any financial decisions.
So if you found this deep dive helpful and you want to stay updated with more stress-free investing analysis, please hit that subscribe button and press the bell icon so you never miss an update. It really does help support what we do here.
And hey, I want to hear from you. Which Indian-listed company should I analyze next? Go ahead and drop the stock name in the comments below, and it might just be the subject of my next analysis.
Thank you so much for watching, and as always, keep your investing stress-free.